U.S. inflation cooled slightly in July, with consumer prices rising 3.4% from a year earlier, as energy and housing costs eased. The latest figures could strengthen expectations that the Federal Reserve will keep key interest rates on hold, while it waits for more signs that inflation is under control. Our Seung-jae tells us more.
U.S. inflation eased slightly in July, adding to expectations that the Federal Reserve may keep interest rates unchanged as it assesses the direction of the economy. The U.S. Labor Department says the Consumer Price Index rose 3.4% in July from a year earlier, down from 3.5% in June, and in line with market expectations. Consumer prices increased just 0.1% from the previous month. Core inflation, which excludes volatile food and energy prices, also cooled. Core CPI rose 2.5% from a year earlier, compared with 2.6% in June, while increasing 0.2% month on month. Lower energy prices helped ease overall inflationary pressure. Energy costs dropped another 1.5% in July after falling sharply in June. Shelter costs, which have been one of the most persistent sources of inflation, rose just 0.1% for the month. The latest figures continue a recent cooling trend, with annual inflation falling from 4.2% in May to 3.5% in June, and now 3.4% in July. That could give the Federal Reserve more room to hold rates steady while watching incoming economic data.
There clearly are some voices who believe that an increase in rates would be appropriate. But given the potential increased weakness in the labor market that we observed in that jobs report, that might make it a little more likely that they hold things steady.
Markets are paying particularly close attention to inflation figures under Fed Chair Kevin Warsh, who took office in May and has emphasized the Fed's commitment to price stability and maximum employment. The Fed last month left its benchmark overnight interest rate in the 3.50% to 3.75% range. Seung-jae, Arirang News.